Monday, May 2nd, market wild again. What's going to happen now? Well, we've been talking about the idea of shorting rallies, and I think ultimately this is the only philosophy that's going to be useful in this market. It's got a lot of weakness in it. It's not technically yet down 20%, which would officially become a bear market. But every day seems to be creating a greater sense of weakness. And when that's starting to happen, there's a good chance you can expect it'll continue. We, of course, are not expecting the worst. We're not expecting a major crash at this point. But the behavior and the internals in the market are consistently showing that it wants to go lower. Our momentum oscillator is saying that we should be going down to probably about 39.50 on the S&P next stop. We've already broken the 4100 intraday. We did not close below that yet. It's still showing resilience and support. However, it's very likely that over the next week, there's a good chance the market will go down below 4,000. And then what? Okay, so we've been talking about a cycle high on May 3rd. It's a minor high, and today, actually, after being down, the Dow was down at one point over 400 points and wound up on the day. However, it still is shaky. It's still showing weakness in terms of the momentum. So there's a very good chance, if there is a high tomorrow, that later in the week the market will come down yet again, and we're looking at May 6th as potential further weakness, and May 9th potentially as some sort of potential low, okay? But then what? So the first half of May has some weakness in it, and the second half of May has some strength in it. We're expecting a high somewhere between the 25th of May and June 6th, at which point the month of June is likely to be continuing weakness. We want to see how much the rally is in May, whenever it should begin. Probably we'll get to 39.50 before it rallies, and then maybe we could see it as high as 4,500 again before it declines. So there is a potential 600 point move up after the low comes in. But nevertheless, we would be shorting this market whenever it has a nice rally. And I think by the late part of May, there will be another opportunity to go short. The month of June is likely to be weak, and into July. And then at that point, potentially, we could have the rally that we were expecting, which could be meaningful over the summer. But until late June, there's not a whole lot to speak for this market. And after September, there's very little to speak for this market. If there's a high around Labor Day, we could expect to see continued weakness later in the year and on again in 2023. So this is just an opportunity time right now to begin to sidestep the weakness whenever it does have a rally. I would consider the option of lightening up on one's positions, lightening up on one's equity positions, being more defensive and more cautious going forward, and assuming that whether or not it happens in May or doesn't even happen in June, that we get down 20%, there's a very good chance this year we will see the bear market show its teeth, and that at that point it may be a little bit too late to protect yourself. All right, on that note, I wanted to let you know that we have created our quarterly report, which we promised, and it will be coming out. The first quarterly report will be free, just to give you an idea what it is. And then later, of course, we'll be charging for it. It takes quite a bit of work to create it. And in it, we will have a macro view of a variety of markets, gold, interest rates, S&Ps, Bitcoin, the VIX index, and some of the things that are very much on people's minds lately. And we've looked at long-term cycles, we've looked at some of the intermediate-term cycles, and we feel confident that we have a pretty good handle on what the future might bring. Tradesthefuture.com is our site. Again, if you found this video useful, then it would help us to have you give us a thumbs up and to subscribe to the YouTube site. Thank you.